TGIF, everybody. How's everyone doing? It's kind of a sad day. NFP, that's not why it's sad. Sad about the assassination of Abe in Japan. That we're living in
Morning,
such a
Dale.
violent age. I came in, why not try to save lives instead of take lives?
Amen.
Anyway,
Yeah.
I guess we get back to business, right? So,
Well, somebody's saying the show must go on.
yeah, I live that. That's in my DNA. And the show must go on, and we're getting some pretty wild action. I'm not sure if this was the spike in the euro came in that happened really across the board in every currency. This candle right here. What was going on? What was going on there? Because it did. Go ahead.
It's exactly the same as we lived, as we saw on Tuesday. I think it could even be possibly the same accounts having some, whether it be leftovers or some things they wanted to do before going into the NFP. It happened around the same time. It happened with the same violence, albeit a lower price action as the one we saw on the 5th on Tuesday.
This one you're talking about?
Yes, exactly.
Okay.
And I've got the impression it's still the same accounts doing their leftovers. Because if you look at it from Tuesday, then over the 6th, over the 7th, you had those little recoveries and then tops coming in and sitting there, like offers sitting there constantly. Also yesterday, at one stage around 102 the figure. And then it seems that they did perhaps the last, but they did the push this morning, and it dragged all the rest with it, exactly the same as we saw on Tuesday. And then we saw the recovery a bit in the rest. Now euro as well ahead of the NFPs, but
yeah,
it looks to be the same accounts having done it. That
How
is
about that?
my opinion, of course.
Okay, and I know there's a lot of similarity in the price action and the candles. The only difference I would point out is when they were doing it back here, look at where they took the RSI down to. Okay, and then we started grinding, and even on the spike, it barely got back under 30. And, if there was ever a day to try and fade dollar strength and, in front of a number, it's hard to do. But the fact that the euro's only down 9 and the cable's down 25, and that we have divergence, and I think Andre had some harmonic up around 107.10. Of course, we had this spike here, but also look at the dollar on that spike. We did not confirm. You have pretty glaring divergence here. I'd be careful being long dollars here.
I agree.
And I've seen, I know you have been around as long as me. It's great to have someone, hang out. I'm a Brontosaurus and you're a T-Rex. and but I've seen a lot of inflection points in the dollar on NFPs in my day. Haven't you? I mean, turning points.
I'm not going to disagree, because we were looking at some charts, pure euro dollar this morning, and I have a decent few targets in that zone. There's a channel target around 10090. There's an extension target around 10080, and we just went below, and then we spiked again. Considering that the Dixie is so much euro dollar, it could be the day. If ideally, actually, what we should do, is to get a retest of those levels, this morning level, and then hope, and then that might be the signal for at least a partial reversal of what has been done lately. So I've even took some profit on short euro crosses as well over yesterday evening and this morning. I cut my shorts in Euro Canada as well, because I think we might have. It could be a funny day coming up on after the NFP.
And also a great buy early in the week came in Aussie. So we've had 2 successive higher highs in the Dixie. and all we had was, Aussie absorbed it very well. So
Very
this would have
well.
been the euro candle at new lows. And to me, it just looks like a pullback, and
Yeah.
it's going to go. I'm not sure, it's Friday, so we could take a look at the weekly, right? And
It's
see if we have, kind of almost a reversal week. Depends how it closes, but
it's it,
um,
yeah,
decent action.
it depends on the close. And if you see we did three decent tries around the 6760 zone, which is that
Yeah,
50% retracement of the 2021 move. It's decent, right? And
yeah,
I'd say I'm not in the position now. I actually cut most of my positions in ahead of the NFP because I think we could have some decent volatility. But I will try again to load up there because from a trading point of view, the risk reward is good, and the clarity for a stop loss below is also good. So
yeah.
I'm having two very decent reasons to try it again down there because my stop is going to be quite limited because
Yeah,
it is
and you know how I feel about that number three. So, three drives, my three sons was a favorite television show of mine in the 60s. I bet Blake doesn't even remember
Oh, I
that
know that
show.
show, but that's old school, Dale. I mean, you really just dated yourself prehistorically. It's
Fred
crazy.
McMurray for a dad. How can you ask for anything more than that? Huh?
Oh
He
my
could
gosh.
invent
I
some
Love Lucy
flubber.
was my favorite show on the face of the planet.
No
And
kidding.
actually, I
Really?
loved it actually when I was a little kid. I thought
Okay,
it was.
because I watched it as a little kid. So anyway, no wonder we're both so
Yeah,
mixed up.
I think I got the reruns. I got the reruns.
I know. Okay, rub it in. All right, so Blake, your impression of what happened last night,
Overnight?
and yeah, and how do you feel about, he wasn't even the president anymore about Abe?
That about Abe, that's a shame, and that must have been Kman for you since you were in Japan for 5 years on trade desk, trading at banks back then. I mean, that must have been some pretty awful news for you to hear overnight. I mean,
very much so, and especially as I was saying, the real sad thing about it is that Japan is such a peaceful country that his
Yeah,
bodyguards were in the same shock as everybody else and failed to react. So in some way, Japan is too peaceful, and they don't know how to react to immediate aggression.
yeah.
And that's the sad part of it because they could have reacted at least between the shots. But
It's interesting, and this has not it has to do with violence, but not and obviously just a Hollywood version of it. There's a show called Tokyo Vice that's on HBO Max that my wife and I we really enjoyed it. It's a real story about an American reporter that went into Japan. Anyway, it's on HBO Max if you guys ever are interested. But the point I wanted to make is they was following the Yakuza and you watch some of the violence in the Yakuza and I'm like, man, they have nothing on the gangs here in the U.S. I mean, it's really so. I mean, Japan is just it is a generally very peaceful place. I was stationed in Japan for 6 months and so I know the culture fairly well. But that news really saddened me overnight, and we didn't see any reaction in currencies. But I guess I should turn our attention since we have very limited time in NFP. But yeah, I was just going to show you guys the euro, and I know you talked briefly about this. I'm gonna just share with you guys a little bit on Forex Analytics, just because we've been walking through this euro all week long. If you look at this is the overnight update with the euro, so the chart you can see here is after completion. But if you go to
you haven't had it yet.
Yeah, we were just talking about all of the 161% extensions throughout the course of the week. The here we go. All the downside flag patterns, the completion patterns that would take us to 1.0070, the wedge, The daily wedge here, you can see it from, this is last night before we completed it. And all of our analysis saying that, that we could reach for those levels. I didn't think it was going to make it there last night, but that was an obvious stop loss run.
Great call.
Well, I wish I would have traded it better.
Yeah.
I can call things, but calling something and trading
It's
something
easier.
Are you kidding? It's like night and day. It's like, that's why when I sit here in the chat rooms and I put in my live trades in the chat room so you guys can see all my open positions. Yeah, I mean, it's much easier to call something, to actually trade it and show that you're in it and manage it. That's a completely different ballgame.
That's hard work.
It is hard work, and that's why I'm very transparent about what I'm doing in our community, in the Forex Analytics community. However, as most of you may have known, well, a lot of Forex Analytics subscribers would know, I started picking up the euro dollar at this 161% extension ahead of the data today, with the anticipation that we were going to be up here anyway. But my stops were below here because actually Benedict from our chat room, he was talking about a move down below 101 earlier this week. I don't want to say it was Tuesday or Wednesday, I can't remember, because I forgot it was a 4-day weekend or a long weekend. Anyway, he was pointing towards a move down here, and I'm like, okay, that matches up with what I see. I better widen up my stops, and I did. Fortunately, it was below this 161% extension, which we hit to a T. But now you're seeing a reversal. Now, the reason why I want to I'm going to talk about this price action really quick. Haven't even heard from Ryan yet. Haven't heard from Steve, and I want to get their comments here because Ryan, you were probably watching it overnight. When we hit this level overnight, it did seem like a stop loss run. Everybody's expecting, well, I want to say the market, one of the reasons why the market is firmed up right now and has been firmed up most of this week is people are starting to look at, data is starting to potentially weaken. We're seeing, we're seeing the stock market start to respond, as we've been talking about for the last, week and a half or so. Bad data is good data. But I take that back. Bad data is good for the markets. And bad data is going to help support equities. But in the currency market, bad is bad and good is good. So people are starting to obviously starting to think that economic data is going to weaken to a point where, the Fed will pivot at some point, and the market's trying to get ahead of that. And so what we are seeing is we're seeing the euro dollar, will reverse here, but on an NFP that is in line or maybe even slightly below expectations, I think we're going to see a reversal in the euro. Now, the question is, how far could that reversal take us? I'm assuming to 103.50, because that is the massive breakdown point, the 20-year lows. That's going to be the, I have to get over all the way over.
I'm so glad it's so clearly defined, Blake. You know why? Because if we start trading back above 103.50, that'd be a pretty good indication that that was it.
Yeah, and it would be technically, but what I'd want to see, and this is where I want to take in some comments from like Ryan, because we haven't heard from Ryan yet. If we got above 103.50 and we started to clear that level, and technically it would suggest, that a low is in. Dollar index cleared out all the stops above the highs. You can see it right here. We get a throw over in this wedge. As Dale, you love to look at those patterns, but we could look at it as just a channel if you want. But, in order for the dollar to really reverse, we have to see something shift with the ECB. And as we all know this week, that's not the case, right? That's not necessarily the case. But could we see a shift, in the ECB? I can't see it. I mean, not right now, but, hell, the market might see some. I'm, who am I to be able to see that, ahead of time? But what do you think, Ryan?
Well,
good morning.
What sort of shift do you think? Morning, mate. What sort of shift do you think from the ECB?
I don't know. That's why I'm sitting here saying I can't see it. I mean, you look at what all the news from Germany or all the headlines from Germany this week, and I mean, obviously this winter is going to be a really effed up winter for you guys in Europe. I mean,
Yeah.
oh, I know you guys aren't Europeans anymore, but anyway, you get what I'm saying.
No, we're going to get it because we get our fuel from across there as well. So we're in the same boat as Europe.
Yeah.
But in terms, I mean, it's like the pound. You know, if you want to take the simple option, you write a list of reasons to buy the pound and a list of reasons not to or to sell it. And you know, the reasons to
well, you're talking sterling, and I'm not talking sterling.
I'm talking. It's the same as the euro right now.
Okay.
How many reasons can you list to buy the euro? And if the whole of the market is thinking the same way, it's only got one direction. You know, at the moment it cannot bounce. You know, this bounce this morning, and we spoke about it on the flow show. I think is a bit of profit taking coming into the number. You know,
positioning,
a bit of risk, bit of positioning. What will be interesting, as Kay said, is what happens if it's a good number. Obviously, dollar's going to get bought. If we can't take out today's lows, that gives you a better indication that perhaps we found a bit of a bottom. If it goes straight through the lows, then you're going to keep needing to redraw your tech lower and lower and lower.
And I've got to say that the parity calls are quite loud right now.
DSI
I don't spend a lot of time on Twitter, not like I used to years ago. But I've just kind of been looking around the last like 24 hours or so. A lot of it because of what happened with Abe, but you know, I've been kind of just kind of looking at the most of the people that I normally look at. And everybody's calling for parity, and so it's a pretty loud
I'm
call
seeing
right
80
now.
cents now too.
Oh yeah, you got 88 cents. I've seen.
Yeah.
You know, I've seen a lot of people with those types of calls, and positioning is probably pretty skewed right now. And I think the dollar index, people, are really, really very bullish the dollar. But I have to also point out that, commodity currencies are still holding up pretty well. You look at the Aussie, I mean, we're right up against wedge resistance. The Kiwi, and by the way, you guys all know, a lot of Forex Analytics subscribers know that that I've been looking to buy the Aussie down here for all of 2022, sub 70 cents. And we're down here, so I'm obviously long. But it's holding up well. And despite the big sell-off that we've seen in, commodities, the Aussies kind of come off, the 200-day moving average, but still it's holding up way better than, most currencies. You take like the sterling or, the euro, the Aussie and the Kiwi are holding up a lot better than that. So it's, something to note. I also wanted to say, because we have people asking about it, but I also want to talk about it. I want to talk about gold. Somebody asked if there was a double bottom in gold. Look, gold just hit the 161% extension. And, I was seeing who was it? There was a bank last night that said gold is going a lot lower by the end of this week, which means that today, if the jobs number is super strong, gold's going to break down. I don't disagree with anybody who would say otherwise, or I would disagree with anybody who would say otherwise if we have a strong jobs report. But if gold can hold these levels, there's a lot of support down here. And you have to, taking a step back, you have to also realize how bullish gold is over time and how bullish it has been. Yes, it hasn't performed very well. I've been, pretty bearish while we were up around the 2000 level. Yeah.
You said everyone you interviewed at the last Trader Summit was bullish gold. And I remember that comment from you. Why is everyone bullish gold?
Because of the inflation narrative. And now that now that we're seeing inflation come down, you're seeing gold come down as well. But I still think that it has performed very well over the last couple of years, and that you can't.
It's all about time frame having to do with gold and silver. I mean,
right? Right, Steve. I mean, Peter Bookvar is going to tell you, "Hey, gold. If you own it, until your kids have grandkids, you're going to make money."
Yeah, I mean, just to give you an idea.
But if you're not going to have grandkids, what do you do with it?
Right. Well, that's the thing. It's like
once again, right?
You got to look. If you're Dale, you got to look at a 15-minute time frame.
I'm very.
Just kidding.
He meant
That was
he's
funny,
kidding,
right?
Dale.
That was a good one.
That was one of your best. One of your best.
He's
man.
kidding, Dale. He meant 15-second time frame.
All right.
I feel
Eddie,
that way today.
but-
Thanks for
but-
the confirmation.
I just want to say regarding gold, and you're right, Steve. It's regarding time frame, but
By the way, gold is not an instrument to get rich. It's an instrument not to get poor. I have to say that
I
again.
like that.
Yeah, it's definitely a hedge, and
Although I'm a little poorer in the last month.
if equities sell off another 20% and gold only sells off 5%, then there you win, right? I mean, in your portfolio.
Not only that, it's a long-term hedge against inflation, because people might not realize and imagine how this picture is going to be if we ask the same question in 5 years from now that we are in a high inflationary environment, right? From 2000 to today, from official data, the dollar has lost 30% of its value. Just let that sink in, right? And it's not only the dollar, of course. I'm giving it as an example, right? So let that sink in. The pace with which fiat currencies are losing their purchasing power is amazing, even under a period that most of it, inflation was low. Imagine if we do the same assessment in a few years after having gone through a period of high inflation, how that's going to look like, right?
Yeah, well, and look, we can get all into that when we go into the morning edge. But we got about 10 minutes before non-farm payroll. I just want to get everybody a few quick setups really fast. So the data that we're looking for, what number do you think is realistic? Kman, Ryan, Steve, Dale, what do you guys think on the headline number? The market's looking for about 250 to 270. 100,000 jobs to be 250 to 270,000 jobs to be created. What do you guys think is going to be the number?
111.
111. Okay. My answer is very simple. I'm not a magician. I don't like the prediction game, but a longer term comment having to do with NFPs will be that, in my opinion, for every month that passes, the chances of a negative surprise increase. So that's my assessment.
Okay. Kman, you have any ideas here?
What a surprise you thought it would be a negative surprise.
I didn't say we're going to have a negative surprise this month. I'm saying that for every month that passes,
we're running low on time. Kman, what are your thoughts here?
Yeah, I thought the slowdown could kick in, but I'm not sure which month. I think it may be this month or next month, but I went for a low one today as well.
Yeah. Okay. So let's just say that the data comes in line with expectations. If it does, I even think if data comes in line, I still think that you have to sell the dollar into a rally. The only time that I don't think that we sell a dollar is if unemployment comes in in line, and then we have a high number. Like, let's say we create 400 some odd thousand jobs, which is possible. I don't, looking at the weekly unemployment claims, I don't know if that's going to happen, but I'm just saying, of course, it's NFP, and it's as Steve just pointed out, it's it's hard to it's a very volatile number. Yeah, it's a very volatile number. So we could be looking at anything. We didn't have a look at ADP this week, which is also kind of keeping one eye closed, if you will. But I do see the dollar as being kind of bid up into this news. Now, if we get a weaker jobs report, and let's say unemployment ticks up a little bit, and let's say the average hourly earnings starts to come off a little bit, that's going to be a pretty negative thing for the dollar. So what I'm going to be looking for today is if we start seeing the dollar index trade back below 106.50. And I think some of the biggest beneficiaries out there are going to be the Aussie dollar and the Kiwi, and quite frankly, the Canadian. The Canadian had a nice reversal, nice triple top set up longer term. We get below, and we do have Canadian data coming out today too. That's something I should also mention, which throws a monkey wrench into the dollar CAD. That's why I try not to talk about it too much on a day like today, because it's multifaceted as far as how the reaction is going to be.
USD NOK also possibly in an ascending wedge. Also,
yes, it is, and we got that was sent out via the Forex Analytics website and platform today. Very big divergent relative strength. Also a 50% retracement of the longer term move that we're rejecting right now. So that's something else that you might be thinking about. If you're looking at the dollar yen, I think the dollar yen is set up perfectly in a breakout situation. This is going to be the pair that we watch. I'm not a big fan of trading aggressively the yen, because as Kman could explain to you guys and gals, the BOJ has been quite interesting in this whole central bank tightening process. So the dollar yen, I think, is set up in a nice triangle, which will be a good breakout candidate. And I think gold, gold's going to be pretty binary. You got a strong data. Gold might break through these lows. If you have weak data, gold's probably going to reverse. And I think if you're trading dollars, you confirm what you're seeing in the metals too. Silver, and I'd like to see silver outperform. Silver's been sluggish considering what gold's been doing. It really has.
Technically speaking, they both look very, very bad short term.
Yeah, but silver's been leading the charge. You look at silver, and we've been noticing here, right, Dale, that it's just been really weak. More so than gold, and it kind of led this move that we saw this week in gold. Silver's been doing it for the last couple of weeks.
Gold-silver ratio made new recovery highs on that.
Right, and so if silver can finally outperform gold, that's always a good indication for you guys that are looking to be long precious metals. But we haven't seen anything of that like that. All we're seeing is some stabilization there. So I'm going to go around the horn. Steve, any last minute comments before the jobs report as I prepare the screen for jobs?
As I've said, the jobs are a lagging indicator, and in my opinion, it's a matter of time for them to start getting worse. Now, is this going to be the month? It's not an easy prediction to make.
Yeah, I don't think it is either. All right, and I'm going to put on equities here, and actually, we're going to put on gold too. So, Kman, what are you thinking here?
With an open mind in this number, same thing as Steve. I don't know when the weaker numbers will kick in. On silver, I think it is the market trying to trade a slowdown, which is sending silver down. Decent levels are just below where it is now in this 1860, 1880 zone on silver. So I'm going to be watching that, as well as the dollar yen, which could be a clean one if the number is good. Let's put it that way.
All right, and so what you see here is, go ahead.
If you break above 136, 2030, we could be off to new highs. All right.
Thank you. Recovery in the 10-year, Blake. We've rallied 25 bips off that 272, and if we're going to new highs, I guess we should still be looking for stronger numbers. Thanks for asking.
Oh yeah, and I was just Dale. Good thoughts, and then I was going to go to Ryan. So, Dale, thank you for that for the 10-year, and Ryan, what are you thinking here?
Yeah, I think it's a binary event. This one, if it's good, we see more yields jumping higher, and the soft landing narrative. If it's bad, then we get the recession fears digging up. For trading it, don't try and guess and jump in on the number. Dissect the details. We explained it in the flow show. Look for your stretch points and where possible price moves break out of the fundamental trends.
All right, and while we're waiting here live, let's just mention that if you guys haven't checked out the trader funding program, we've had a lot of traders access our funds to trade this week. We had a lot of live accounts get triggered. People are passing their assessments.
My bank account. I can't donate anymore to the DFP.
This is a way for you to access larger trading accounts. If you want a 2-minute explainer video, it's at the very bottom. It's called the Trader Funding Program. So check it out. You get to keep 75% of the profits, and you take none of the risk once you have passed the assessment. So that was our sponsor of today's show. And here is, how much time we got?
30 seconds.
All right, we got 30 seconds. All right, so this data flash is actually included with Forex Analytics. One of the things about in the trader funding program is you get to go through the program, but also be in the Forex Analytics community. with a bunch of trade ideas, with a bunch of traders that are like-minded. That's a benefit. We don't just kind of leave you out there alone. Come join us and get some good trading ideas and support. That's what it's all about when we trade. All right, here we go. Data's coming out.
Let's
Heads
see.
up, guys.
Is that a minus?
Good number. Good number. Wow.
Good
Look
number.
at gold. Just came under...
But look at the Canadian number, by the way.
Yeah, but I don't care about that.
Yeah.
That was good U.S. data. 381,000.
Okay.
Gold did come under pressure. Dollar.
I'm saying that because the cross USD CAD, due to the divergence in numbers, might actually move a lot.
It is. The dollar CAD is moving higher. We have the dollar yen moving right up into resistance above 136. And actually, you're looking at all the data. Do you guys see anything that's kind of sticks out as far as the U.S. data goes? Because even on this good data, we're not seeing a lot of dollar follow through. We have the euro coming off again, but
it's following all the other ones. There's no worries here. There's no shocks coming in. There's no weakness coming in. So the market's probably going to be a bit relieved that it isn't bad. But it keeps the picture going. It doesn't make it super hawkish. It's continuing to do what it has been doing for months now. So
keep in mind though that participation rate keeps sliding lower, almost at all-time lows. So the trend of participation rates, over time decreasing and decreasing is ongoing. Within that participation rate, a lot of the real employment data are hidden, because I remind you they've changed the the employment date and how they count it and who they count as unemployed, etc. So this is an issue that's going to be a long-term issue. Of course, nothing that the market is going to trade on today. Today, the market is going to trade on today's main numbers, which are definitely good.
All right. Well, we have Marc Chandler is our esteemed guest today. He's in the house. I'm really always excited to get Marc Chandler and his views on the markets. But I want to say thanks to the Forex Analytics team, Ryan and Kman. Great job on the Flow Show. If you guys are European traders, you're up in European hours, you should be listening to the Flow Show every day. It's free, and it's always great to have your guys' views. Steve, thank you for being here all week. I know we missed Stelios. Dale, you're always awesome. And Marc, you look extremely dapper this morning. Good to see you, Marc Chandler.
Good morning.
Yes, Marc. Welcome back to F.A.C.E. You're on camera. What the heck? This is what I look like on a Friday. All right, buddy. So first of all, reaction to the better than expected NFP.
Yeah, what can you really say, right? I mean, I think, of course, what it shows is the resilience still of the labor market. It is slowing. And I think that, to me, there would be, so, of course, we're trading off of the strength of the number. And what this means is that the Federal Reserve is still going to be raising rates 75 basis points later this month. Underneath the surface, a couple of things that stand out to me. One is that for the third month in a row, average hourly earnings fell. That's a year-over-year pace, slowing. This is a source of inflation. Secondly, the average work week fell. I know a tenth of an hour doesn't sound like a lot, but when you have over 100 million workers, a tenth of an hour turns out to mean something in output terms. And the third thing I would say is that broadly, underneath the surface again, is the pace of job growth is slowing. And when Powell talks about the labor market, he says that the Federal Reserve has one number in mind when they think about inflation. And then he says, but there's a lot of different indicators for the employment data. And I'd say the weekly jobless claims rising, the continuing claims just slowly coming off of the lows, and now a slowdown in the labor market. This is what the Federal Reserve wants. It's not going to inhibit them at all. 75 basis points later this month, 50 in September.
Well, since you're talking about labor, Marc, let me ask you this. Since a lot of people did go to the markets during COVID, and a lot of people were feeling the wealth effect during COVID with a huge parabolic great move in stocks, parabolic in real estate, and that's changed. Could the great resignation turn into, hey, I have to go out and make some money in the days ahead?
Well, I think that's partly true, but and this is part of the weakness. I think that someone had previously mentioned as the data first came out was that the participation rate.
Right.
So in some ways, the participation rate never got back to where it was in before the great financial crisis.
Okay.
Canada, for example, have basically gone back to where they were before the pandemic. So the U.S., we do have this low participation rate. I think it's a big demographic, sociological issue going on. And it's a lot of guys like us, Dale, unfortunately, guys who are, say, older than 50, retiring early.
Oh, I just started.
Perhaps,
I'm at 51. Yeah.
51 again. And but I think this is the problem. I mean, is that we have a very low, historically and relative to other high wage economies, a low participation rate. And this is part of the thing that's holding the economy back.
Okay. And that's also part of the thing that's pushing the Fed forward.
Yeah, I think so. It makes the labor market tighter. And we're going to get this number later today. Of course, it's focused on the employment data. But later today, we're going to get this consumer credit number. And this is what I think consumers are doing. They're borrowing from the past to meet consumption. How do you borrow from the past? You go into your savings, you take equity out of your house as you refinance. And they're borrowing from the future. In the last 2 months of data, we've had a record level of credit card use.
Have we seen this movie before, my friend?
Well, I think so, but the labor market, as today's numbers show, I mean, these kind of numbers in any other time would be considered very strong numbers. And so I do think people are coming back to the labor market. We see this in the non-farm payroll number. But I think that, I don't know about you, but I see my cost of living is jumping. And in order to make up for that, I think it's also drawing people into the labor market. And how are we making ends meet? Our bosses are not giving us the kind of raises to match inflation. So what are we doing? We're borrowing to keep that consumption high. And I think that's sort of the late cycle indicator.
Yeah, kind of a hangover. Look, I can understand after being locked up for 2 years that no one's going to be as price sensitive to go out and live life, not just exist in their abode. But I think there could be a pretty heavy hangover this fall when people realize prices aren't dropping and the money they've spent and the value of their assets have dropped. And could we have kind of like a self-fulfilling prophecy? Everyone's talking recession. People are starting, the job cuts are planning it, where people just get the mindset that we're going to have one, and they pull in their horns before really they see their eyes, the light of the eyes of the recession.
Yeah, I'm afraid that while it's possible, I don't think it's likely. In fact, next week we're going to get retail sales for June, and the retail sales after some weakness are likely to jump back. And so I think so. I fully agree that the economy is slowing. We're headed for a recession. We're not there yet. And I think the danger is we lean too far over our skis, anticipating one. And the first hurdles in front of us, I think the big thing is still better news here. Federal Reserve is going to raise rates 75 basis points, and other countries are having their problems. I think about Europe. I mean, Europe has a new energy shock. They're beginning to ration energy in parts of Germany. You've got even though U.S. interest rates have come off a bit, European rates have fallen further. So the U.S. 2-year premium over Germany is the widest it's been for a couple of years. And then on top of that, Europe is trying to put together this package, this new tool to prevent, say, Italian bond yields from rising too fast against German bunds. And the market's sort of having second thoughts about that, which is seen as another weakness of the euro, or weakness of the European monetary union.
Okay, Marc, I remember we talk every 3-4 months here on F.A.C.E together, and it was a couple interviews ago, and you were saying way back then that I'm concerned about the economy beginning to weaken and the Fed tightening into it, so that you still have to have those concerns. And you're saying the Fed's going to go ahead, same pace, 75 basis points at the end of the month. Is that still a concern and more of a concern as time goes on?
Oh yes, I think that I think that in some ways I'm sort of trying to straddle this middle ground between the people who say the U.S. economy is already in a recession,
Right.
and those people who are sort of further who think a recession, perhaps like some Fed officials, can be avoided. And I'm sort of in between that camp, thinking that a recession is coming. And it's not just monetary policy. I know that's what in the markets, that's what we mostly talk about. But take a look at fiscal policy. The U.S. budget deficit this year is likely to be halved, 500 basis points. That's from a bit more than 10% to a bit more than 5% budget deficit. Still a large deficit, but when we sort of, me as an economist, as a strategist, when I hear a big fall in the deficit, I think that means a big loss in income. Because what's the government spending money on? The government's money spent is someone else's income. And so we're going to lose income. So we got fiscal tightening, monetary tightening. We've got this energy shock still. As I mentioned before, oil prices typically double before the U.S. heads into recession.
That was
And we've more than doubled now. And I'm watching weekly initial jobless claims now. I'm watching the 4-week moving average, and it's almost back to where it was in 2019. So I'm concerned. I'm watching the continuing claims too, but I think that we are slowing down quicker than the Federal Reserve is. And that tells me really is that even though the market's got 3.5% Fed funds for year end priced in, I think that could be very well proved to be the peak this year. So all this talk about front loading, I think, is a misnomer. They were caught sort of with their hand in the cookie jar behind the curve. So they're playing catch up. And because of these headwinds to the economy, I think that we're going to see that market slowdown, accelerating, where the Fed has to hold off hiking next year.
Okay, so we should end this cycle by the end of the year. Maybe it'll turn into a Volcker scenario where they stop, and then everyone goes back to risk, and the markets all take off, and inflation is back, and they have to do it again.
Yeah, I mean, I don't think we're out of this big cycle. I think that the next step in the cycle is going to be, as you say, a tightening of policy. Then we're going to get a loosening of policy. And I think that the next cycle also, the sentiment in the foreign exchange market shifts from growth differentials, interest rate differentials, back to the twin deficits, large budget deficit and a large current account deficit.
So when the markets finally shift to that, and make it count by people's votes with their dollars. People have been talking about it for eons. Okay, that should be the end of this, spectacular bull run in the dollar, don't you think? Do you think that we're getting close to any kind of inflection point with all the fundamentals that you've just talked about with me over the last, 20 minutes, Mark? And
Yeah, I'd like to think so. I mean, but honestly, Dale, I've been trying to pick a top here in the dollar several times. We try to pick a top, and then we realize we're wrong. We limit our losses, and we look for another opportunity. And I'm afraid that we're not quite there yet for another opportunity. I too see the market stretched, but I don't see today's jobs number really changing the dynamics. And it's not just that slightly better things are happening here, but that there's also bad news streams still coming from Japan, which, their economic recovery looks like it's stalling after they contracted in Q1 as well. And then, of course, a host of European problems. So we need better news stream from there, would really help to pick a top for the dollar.
Okay. And I'd like to know what you're thinking for next week. The NFP, we didn't have a ton of volatility, but everyone's saying the CPI next week is the biggest number in 1,000 years in the market.
Yeah, I don't know. I think that we already know what's going to happen in some ways, right? We already have a pretty good idea that the headline accelerated. And we also have a good idea that the core rate decelerated. So what? So the Federal Reserve is still going to go 75 basis points later this month, which is already priced in the market, 50 basis points in September, already priced in the market. So I think that that's what's going to happen, right? Is that the news for the dollar, I think, is being priced into the market. And now with the momentum traders, like many of us are, trend followers, like many of us are still pushing our luck because the euro hasn't been able to sustain upticks. The dollar yen is still driven by the 10-year US rates, which continue to hover around 3%. So I think that we know more or less the scenario for next week. I think the surprise will be that that still the resilience of the economy coming from retail sales and industrial production.
Okay, so let me ask you about, you brought up yields. The kind of swings we're having, when you and I were back in Chicago, and we've saw some of those swings in interest rate pits. A lot of people are saying that it's a sign of instability. It's almost like how debt markets are in banana republics. You think they're exaggerating?
Yeah, I mean, I think what's remarkable to me is that the move, which is sort of the bond market equivalent to the VIX, is at very high levels, higher than it was in 2020. But I think that this really is a testimony to really the strength of our financial system, because this kind of volatility has not really disrupted things. At the end of the day, yes, it's maybe a little bit harder for traders like ourselves to make money in this kind of volatile bond market.
Bids are wider. Bid offers are wider.
Bid offers are wider. You get bigger moves during the day. So people who are vol junkies, you really can get your fill there in the bond market, which is more volatile often than the equity markets has been. And yet, I think that the fact that we're not talking about financial instability right now. I know these claims about Banana Republic or whatever, but at the end of the day, I think that the auctions in the U.S., the bond market itself, the fact that there hasn't been a policy response, the fact that people are not like jumping up and down talking about the financial stability, I think is a testimony to the ability of the capital markets to absorb this kind of volatility without becoming unhinged.
What a patriotic thing to say a few days after the 4th, Mark. We still have the deepest markets, the highest integrity in the world in our markets, and that's where money is treated best when they want to park it. Any comment on this recent bond rally, bear market rally, or is it more significant before I let you go?
Yeah, I don't know. Here's what I think is that if one would assume that the Fed funds are going to peak, that its overnight money is going to peak at 3.25 to 3.5, then I ask myself, what is fair value for a 10-year yield? And I think that fair value is around 3%. And so that means there's probably value as we like move back to the highs in the yield. There's value up there, and I think they will see not only Americans but foreign investors buy it. But for us Americans, here's a trade, not so much a trade, but as an investment idea. Where can one get 9% right now? The I bonds, the U.S. government sells.
My sister asked me about those. And
Good,
I said, yeah, I didn't even know about them, Mark. And I go, they look fine.
This is for everybody and their sister. Is inflation-linked bonds sold directly by the Treasury? You get them online. The caveat is you can only maximum of $10,000 per Social Security number per year, but you can get over 9%. Taking just the government as your counterparty, that's the risk you're taking on, the U.S. government getting 9% on these I bonds, inflation-linked securities made for retail investors.
Yeah, what a great product. What took you so long?
Exactly, huh?
Yeah, so Mark, thank you. I know you got to run. It's a busy day for you. I appreciate you coming. I love talking to you. I feel like we're old friends. I think everyone that's watching or sees the video later, you can always keep up with Mark on Twitter at Mark Making Sense, and then go to his blog, and maybe there's something he could do for you at Bannockburn. And Mark, have a great summer, my training warrior brother.
Thanks, and good luck. Good luck to everybody.
Yeah, good luck, and we're not against luck, right? All for luck. Good luck, America. How about good luck, America, right now, Mark?
Good luck, America. I know that I have the same sign in my office as I think you do, right? The harder I work, the luckier I get.
Yeah, and you know what? It works. All right, buddy.
Something does, huh? Good luck, man.
Yeah. All right, Mark. Everyone, Mark Chandler. Hope you enjoyed it, and everyone have a great weekend. You could join the team in 25 minutes on the Morning Edge. And guys, do your work over the weekend. I'm very amazed at all the people that are passing assessments. I don't have the energy to do it, but some of you young guys out there, what a great way to go if you're underfunded, to find a way to do that. And you know, have some real money to trade. If anything, what an experience it would be for you. So thank you everyone for your support. The way to say thank you is get involved with us. Have a great weekend. And I'll say goodbye for the whole dream team. And remember, most of all, you know, we're here, we're free. I know, you know, the great reset is happening, whatever it is, but money comes and goes. Time is gone forever. Make it count. So have a great weekend, everybody.